A very good morning, everyone, and thank you for joining. My name is Tanya Thomas, and I will be your host for today's webinar on excise tax, the new changes and amendments in executive regulation. Before we dive right into the webinar, I would like to give a brief introduction about our company. ITC Accounting and Tax Consultancy is one of the top and most reliable tax agency firms in the UAE. In a short period, our team has mastered how to give clients the best tax solutions catering to their needs. You can expect an uncompromised approach when it comes to quality and professionalism. We deliver a streamlined outcome that sets us apart from the competition. We have already positioned ourselves as the corporate tax, VAT, and excise tax specialist in the market. With a fast growing team of qualified and dedicated professionals, we stand out and meet the expectations of today's highly challenging business environment. By bringing the best team at your service and highly experienced tax and finance specialists in the industry, ITC will continue to create long term relationships with various businesses by having the ability to deliver exceptional service that is satisfactory on all levels of quality and speed. As a testimony to our strategic and proven approach, most of the customers we serve are generated through referrals and repeated businesses. Moving on, I would like to give a brief introduction about our speaker for today's webinar, Mr. Huzaifa Abuheba, Associate Tax Director. Mr. Huzaifa is a seasoned tax expert and FTA-approved tax agent in the UAE. With a remarkable 11-year track record in accounting and taxation, he brings a wealth of expertise to various business sectors. His specialization lies in handling indirect taxes, including VAT and excise, while showcasing proficiency to streamline financial operations. Driven by a self-motivated and ambitious nature, Huzaifa's dedication ensures seamless task delivery even in challenging situations, making him a reliable and efficient professional in his field. As an associate tax director at ITC Accounting and Tax Consultancy, Dubai, Huzaifa plays a strategic role, offering valuable tax advice and ensuring strict compliance with tax regulations for clients. His standing as an FTA registered tax agent adds further credibility to his services. Huzaifa has continuously honed his abilities to deliver exceptional performance and solutions to the company. Before we start the webinar, I kindly ask our audience today to share their valuable questions on the subject in the Q&A section. This will contribute to an interactive session and ensure that you derive maximum value from attending. Your participation is important to the success of this event. I would now like to invite and hand over to Mr. Huzaifa to commence the webinar.
Hello everyone, good morning. Thank you, Tanya. Thank you everyone for joining today's webinar. Today we will be having a discussion regarding the changes happened in the excise tax and executive regulation. We know that and understand corporate tax now is a hot topic and everyone is interested to know more about corporate tax. But at the same time, let's not forget to check the excise tax. And that was like one big development happened in November when there is a cabinet decision mandate was issued to amend the executive regulations on Federal Decree Law number 7 of excise tax. So mainly this is the first amendment of the executive regulations, the introduction of excise tax since October 2018. There was amendment happen in the federal law, but for the executive regulations was the first amendment, and it was effective from 1st December 2023. So mainly the amendments, some of the amendments was regarding the changing of words and which did not have a big impact on the interpretation or in the process need to be carried by taxpayers. And some of it has actually, it was a good development and it has impact on taxpayers when it comes to compliance that required documentation. So when we will start talking about the amendment, we will start talking about the definition. And actually, so we can move to the next slide regarding definitions. So the executive regulation was amended starting definition. There was about 5 to 6 new definitions added. We will talk today about main 3 definitions we've added. First one regarding the official evidence. So I think the slide is hanging. Okay. So first one is regarding the official evidence. That was one of the new definitions added to the executive regulation that was not previously there. There was some interpretation of official evidence from the authority, from taxpayers, but with the issue of this new executive regulation, now it's more clear. So now in the new executive regulation, the official evidence, they have added 3 options. One is the export certificate issued by one of the customs department in the state, or a clearance certificate issued by any of the department, or any document or clearance certificate certified by competent authority in the country of the destination. So it was actually a major development by the introduction of this definition, official evidence. So now it gives the option. It's either you possess export certificate or clearance certificate or a document of clearance from the nation country, the import country. There were also an addition for another definition, which was the shipping certificate, and they defined it as a document issued by sea or air or land transport companies, an agent proving the transfer and distribution of excise goods from the state to outside the state. That was also an important definition, and we will see the importance of this later when it comes to the exemption of export and the deductible tax. The third definition was added regarding commercial evidence, and it looks quite the same of shipping certificate. However, they added that this document should include any of the following, and they have mentioned airway bill or air manifest, seaway bill or sea manifest, landway bill or land manifest. So, as we know that in the previous executive, there's no mention of these definitions, and it was subject to authority, subject to the taxpayers to interpret with what exactly is the document to be kept. But now with the introduction of those definitions, it's more clear for taxpayers what kind of documents they need to keep. Now moving to the second amendment, which we will talk about today, which is about the rejection of the tax registration. So in this article, it's Article 5 in the old provision. It was only mentioned that in case of the request of tax registration, we are talking here about excise tax registration, is rejected, taxable person has the option to go for a reconsideration, requesting FTA to for the questioning why they rejected his application, and also to submit another tax registration. However, in the new amendment, it was interesting amendment because they have removed the request of reconsideration option, and they have mentioned that in case the application of tax registration is rejected, it should not preclude the compliance of the person. So in this case, actually, the decision moved the burden to taxpayers when it comes to the compliance. So it doesn't mean when you apply for excise tax registration and your application is rejected that you don't have a tax compliance and you are not required to do the compliance. No, even if your application is rejected, and once you have a development to make your statute eligible for registration, then in this case, you have to resubmit another application to the authority requesting to register for excise. So mainly this development was about move the burden like from FTA, because earlier it was about submitting a reconsideration. Now it's a burden on the taxpayer to ensure compliance with the taxation regarding excise tax. Now moving to the next article, and that also one of big development happened in the executive regulation. It was regarding tax deregistration. That was Article 6. So when it comes to tax deregistration in Article 6, so in the previous executive regulation, there was no freedom to the authority to deregister any tax registered person unless they submit a request. However, as there is a new amendment, the authority has the power to deregister any taxpayer as long as he is no longer responsible for any tax, any excise tax, and also if the authority can see that maintaining this tax registration will prejudice the integrity of the tax system. So based on this development, the authority now has the power in case, because we have seen some companies, they are registered for excise tax, and actually they are not eligible, they are not conducting any excisable activity. So earlier, it was only about the taxpayer to submit a deregistration request to the authority. However, now, based on the amendment happened Article 6, in Article 6, the tax deregistration, the authority can deregister the taxable person, and actually they have to file him within 5 business days as per new amendment. And also, actually, there is one addition. It's not mentioned here, but there was one addition. There should be a 6 months pass from the tax person who stopped conducting the excise activity to consider him that he is not responsible for the excise tax. So, for example, let's say a company, they are conducting some activity, let's say import of perishable goods, and they just stop engineering. Then they need to wait for further 6 months. So by doing this, it will be only considered that they are not responsible for the excise tax liability, and in this case, the authority can be responsible. Also, it was mentioned that in case of the new registration, let's say there is a new company going for excise tax registration, and after that, after they for registration, they stop conducting activity. There should be 6 months should be lapsed, and the authority registered them. So moving to the next slide. So the next amendment actually happened in the stock provision. So as per the old effective regulation, it was stated that filers need to maintain audited stock reports when it comes to the stock they held in the beginning of the implementation of taxation, or in case of they had like price hike and so on, required the stock file calculation. However, in the amendment, it was clearly mentioned that in case the person is not maintaining audited stock report, so the authority the whole kept stockpiler is excess stock and subject to excise tax. That was a very important development, because that was not the case in the previous executive regulation. It was only stated that stockpilers they need to keep maintain and audit stock reports. However, the new executive regulation gives the authorities the power to say that the whole stock kept by stockpiler as excess stock and excise tax is due on this stock. Moving to the next slide, that's another development happened when it comes to the release of excise goods for consumption. So I think there is a delay in moving slides. Yes. So this development happened in Article 12, release excise goods for consumption. So in the old article, it was stated that if there is a shortage excisable goods kept in the designated zone, this is considered as a release of consumption. And then was an exception given when it comes to the warehouse keeper notify the authority with 30 days from the discovery of the shortage. However, as there is a practice, there was a differentiation between the physical laws and non-physical laws. However, there was no clear state in the executive decision regarding this point, and there was the introduction of Cabinet Decision 108, the amendment they have introduced in Article 12. It was stated clearly that there is, as an exception to the paragraph D of 3, release of excise goods for consumption is not deemed to have occurred if there is a natural shortage in the quantity of excise goods in a designated zone where all of the following conditions are met. Here they have set 3 conditions that it should be met. Consider the natural shortage, which we call it the non-physical loss, which can be like evaporation or moisture loss. In this article, they have introduced 3 conditions. If it's met, then this loss will not be considered as release consumption. The first condition is the shortage is an result of natural characteristics of the goods and the standard of control specified by the authority. Here is still there is more clarity required from the authority because it has mentioned that according to the standard and control is by the authority, which I believe it will require the authority to issue later a clarification what kind of standard and control is required by warehouse keeper for this one. The second condition is the owner of the excise goods and the warehouse keeper should notify the authority of the shortage in according to the procedures, which we know that this was actually what is happening in the previous period. But here they make it more clear. The warehouse keeper is required to notify the authority as per the forms and through Imara tax portal regarding shortage. The third condition is the the owner of the excess goods and the warehouse keeper keep documents proving the shortage resulting from the natural characteristics. So now by adding this additional point, it's required for warehouse keepers to keep the sufficient proof of the non-physical loss, which I believe many of taxpayers facing an issue regarding this point because non-physical loss it cannot be measured. So why it's all based on the percentage and assumptions. However, as there is a updated executive regulation, it's required by taxpayers to maintain the required document to prove the non-physical loss. So that was regarding the release of excise goods for consumption. Now moving to the next slide, and the next development happened, and I believe this is one of the main development introduced in the executive regulation, which is regarding the exemption for exported excise goods. So it's worth to highlight that in the old provision, in the old executive regulation, Article 14, it was stated that the direct export be exempted if official and commercial evidence of export is retained by the exporter. Now, this is very crucial and important point because in the old provision, it was said that you have to keep both commercial and official evidence. However, So that was applied for the direct export and the indirect export as well. The difference that in indirect export, the overseas customer will obtain this official commercial evidence and will hand it over to the supplier. But in the new amendment, it was they made it or. So moving, we can see that the amended provision when it comes to the exemption for export, it's mentioned that export shall be exempt if the exporter retain any of the following. So now we have three options of set of documents. If the exporter maintain it, then his export will be exempted for excise tax. The first option is a custom declaration and commercial evidence that proves the export. And we have seen in the definition earlier, commercial evidence was stating about the mainly the shipping certificate, it's a bill of lading or certificate of shipments. In this article, he gives the second option, which is, so I think it's delay moving slides. Yes. So in this one, in the second option is a shipping certificate and official evidence to prove the export, or the third option is a custom declaration that prove the suspension arrangement of custom duties. So now in the new executive regulation, when it comes to the exemption export, there is an introduction for three options of set of document. Any of it should be sufficient for your export. First option is custom declaration and commercial evidence. Second option is shipping certificate and official evidence. Third option is custom declaration that proves the suspension arrangement for custom duties. The same criteria was also applied to the indirect export. And as we discussed that the indirect export is only the difference is the overseas customer will obtain those documents and will hand it over to the supplier in UAE. So that was a very important development, and it's kind of relaxation of the set of documents required by taxpayer to maintain. However, in the same article, actually they added another two provisions which make it not relaxation, which make it actually a little bit more tight, which we will discuss further. So moving to the next slide. So in this one, actually, we will discuss the two additional requirements. It was added in the in Article 14 regarding exemption for export. The first one is, which is interesting, the authority decide not to accept the documents submitted if they do not constitute sufficient evidence of the exit of the goods and may specify alternative forms of evidence. So in the previous executive regulation, we had similar clause. However, it was only stating that the authority may specify alternative documents. However, in the new amendment, it gives the authorities the power to decide not to accept the documents submitted if they do not constitute sufficient evidence. So actually, this is like giving way more power to the authority to refuse any set of document by exporter. So why now exporters need to be more careful when it comes to documentation regarding their export transaction. Another clause was, and that was actually a totally new clause. The customs department must verify the type and quantity of exported goods with the export documents issued, thereby according to their custom procedures in force and based on the classification of the stress matrix. So this actually, the new clause, it has potential preparation. It's easy because it's mentioned there, customs document must verify the type and quantity. So it's either they refer here to the inspection, which is conducted by custom authority, because I believe this is the only way that the custom authority is verifying the goods going for export, the quantity, and the type of goods. So it's either meant that this is the inspection, which is required for all exporters going, or it will be interpreted as this is the customs risk matrix. So only if customs authority requests inspection, it can be there. So actually, in this article, in Article 14, there was in the beginning relaxation of the set of documents. The authority, the cabinet decision give like better set of documents, we can say this. So instead earlier it was official and commercial evidence. Now it's three different set of documents and it's about or either custom declaration or commercial evidence certificate and commercial evidence or shipping certificate and official evidence or custom declaration prove the suspension. However, after that they have added additional rules which will make it tough when it comes the authority may decide not to accept the document submitted, which require taxpayer, to maintain the most document possible to prove their export of document, and also the additional rule when it comes to the custom department must verify the type and quantity, which will require inspection and might cost businesses like additional time and money as well to run inspection for all their goods going to export. Now moving to the next slide, and the next amendment Article 15, and in this article zone, and actually there is a much development happen. Some of it, to be aligned with public clarification issued recently. So in the old provision, it was stated the authority may request a financial guarantee for the registration of each designated zone specified. However, in the new amendment, they have added like multiple clauses. The first one is the authority may request a financial guarantee upon registration of designated zone or upon its registration renewal or amendment specified by the authority. And this one is interesting because the registration of designated zone we understand, the renewal we understand, but when it comes to the amendment, we believe that this is related to the introduction of the new calculation the authority have introduced in the recent public clarification when it comes to the 6 months closing stock. So in case of your renewal of the or registration of your DZ, you need to monitor your closing stock for 6 months, see if it's more than 20% of the closing stock which you use to register or renew your DZ. In case it's more than 20%, you are required to notify the authority and they will increase your financial guarantee accordingly. So we believe that in this clause, they have added that or amendment as specified by the authority to cover this point. So when you submit amendment, now the authority can increase your financial guarantee. The other clause added is designated zone will be treated as if it were within the state if it changes its operating mechanism or violate any of the conditions upon which it was specified as a designated zone. That was there in practice. Now they emphasize in the executive regulation. So we know that in case you have a designated zone and you violate the conditions that you had when you register it, and also it's either your PG became suspended or expired. This will make your zone considered in the state, and whatever excisable goods you are obtaining in your designated zone will be considered released for consumption, and excise tax will be due on it. The additional clause added was about the warehouse keeper shall be required to retain documentary evidence as specified by the authority on the value quantity of excise goods subject to deficiency or shortage and that which was already destroyed. So in the previous executive regulation, it was stated that the warehouse keeper must maintain documents for the transaction, such as the goods going to production and the goods going for export, the goods moving to another designated zone. However, in the recent amendment in Cabinet Decision 108, they have added another clause that the warehouse keeper need to keep information when it comes to value and quantity of excise goods subject to deficiency or shortage, that which was or will be destroyed. So this means even though the housekeeper had excisable goods or a shortage and it's already destroyed, he still keep maintain the documents to prove this, and also for the goods that he will be destroying, he need to maintain the supporting documents. Moving to the next slide. So mainly this amendment which we'll discuss today is regarding Article 16 regarding deductible taxation. So in the old provision, it was stated that any deduction of tax will be subject to the condition or evidence requirements specified by the authority. As per the new executive regulation, it was more clarification and more conditions that you can rely on when it comes to the deductible tax. So the first change was in the event that the tax is deducted in accordance with paragraph A and B clause 5, any of the following must be submitted: a custom declaration and a commercial evidence, or shipping certificate and an official evidence. So here we are talking about the deductible tax which you are taking when it comes to the export of goods. We discussed earlier there was an amendment when it comes to the definitions. They added commercial evidence, official evidence, shipping certificate to the definition. And then in Article 14, they have added for the exemption of exported goods that taxpayers to prove the export, either they maintain a custom declaration, commercial evidence, or shipping certificate and official evidence. So now in deductible tax provision, they are stating that for any deductible tax taking in accordance to the export of goods, we need to maintain custom declaration and the commercial evidence, which mainly is a shipping certificate or certificate and an official evidence, which mainly is the existed. The other addition in this article, it was about the purpose of this article. The taxable burden is the tax in the following two cases. First, will subject to tax and on which tax has been paid, or the right to deduct tax arising in the same period for which tax is due. So mainly here they are emphasizing that when tax can be considered deductible, so mainly if it is paid on the excise goods, then they have emphasized when tax will consider paid. So first one, if you are purchasing goods that were subject to tax and tax has been paid already, okay, this is clear. Second point is the right to deduct tax arising in the tax period for which tax is due. So this is mainly if you are having a tax due and in the same period you are taking deduction. So let's say you did import during January 2024, then now tax is due. However, you are not paying it till you submit your bill, right? So in this case, if you exported these goods, let's say during January as well, you will take deductible against your import. So in this case, the authority will consider that like tax has been paid, and then you can take it as deductible. So these laws cover those 2 points. Now, moving to the actually last article for today's session, and it's also was one of the big developments happen in the new executive regulation, which about tax refund in the special cases. So before proceeding with this, it's worth to highlight that in the published executive regulation in the Federal Tax Authority website, either the Arabic or English version, there was no stating that when this amendment is going to start. However, in the official magazine, the official gazette, it was stated that this new article is going to be effective from 1st June 2024. So that was worth to highlight. So for this article, for tax refunds in special cases, mainly they introduced articles regarding the non-taxable person. So basically, how excise tax works, if any taxable person containing excisable activities such as import of excise goods or production of excisable goods or stockpiling or release from designated zone. In these cases, he will become a taxable person for excise tax purposes and then eligible for registration. And after he gets excise TRN number, he can conduct his excise activity. However, in this clause, we have added new provisions for the non-taxable person. Non-taxable person means if there is any company in business and they are not conducting any of the four activities which I have mentioned. So in this article, they have mentioned that if a non-taxable person who is conducting business directly exports excise goods, which tax was previously paid by a tax person, he may submit a refund application subject to the following conditions. So mainly here is about non-taxable person who is not registered for excise tax. He is in business inside UAE. He purchased excisable goods, which tax is already paid on it, and he exports it. In this case, he will be eligible to submit a refund request to the authority if the following conditions are met. First condition is the excise goods are physically exported to a place outside the state. So basically, it's about you have to export the excisable goods. Second is he submit evidence proving payment of tax on the excise goods in the state, provided such evidence proves the amount of paid tax. So basically, you are claiming that you purchased those excisable goods from local market, which tax is already paid. So you have to maintain the proof that tax is already paid on those items and provide it to the authority to be eligible for the refund. The third condition is he must retain any of the following. First is custom declaration and commercial evidence or shipping certificate and official evidence. So basically, this is the set of required documents which you need to maintain when you are doing the export transactions. The last condition is the excise goods are not used partially, fully, or altered in the time between supply and export, except to the extent necessary to prepare the excise goods for export. So this was very important development. And as I mentioned, as per the Oil Gazette, it was stated that in the cabinet decision that this clause is going to be effective from 1st June 2024. So now this is good for business owners who are having a business in UAE and they are not registered for excise tax. Now they can think about doing some export transaction when it comes to the excisable goods because they will be eligible for refund as per Article 22 of the exit regulation. However, they need to maintain and they need to comply with the conditions set by the cabinet decision, as we mentioned. So moving to the next slide. Mainly, this is also additional clause. It was added to Article 22, and this that mostly it export, same conditions, same criteria. Only the difference, as I explained previously, the indirect export is that overseas customer need to collect this document and hand over to the supplier in UAE to be eligible for a zero rated export, means the exemption of excise tax comes to the export. So in this one, as I mentioned, that this will be a good opportunity for businesses who are not registered for excise tax. They are willing to do some export of excisable goods. So this will be an important improvement. However, as I mentioned in the official gazette, it was mentioned that it will be implemented and effective from 1st June 2024. So moving to the next slide, this is the regarding the summary and conclusion for today. So, like today session takeaway tips. So there was a main development when it comes to the definition. We introduced the official evidence and commercial evidence and also shipping certificate. There was a little relaxation when it comes to the set of documents, when it comes to the export of goods, exemption for export, because now it's required to have a custom declaration and consumer evidence or official evidence and shipping certificate. However, as I mentioned that in the same article, they have stated that custom authority must verify the quantity and the type of goods, which can be interpreted as the inspection is required. Also, it's stated that the authority may reject the submitted documents and specify alternative document. That was also a very important development. Other point, when it comes to the efficiency regarding the zero zone for the release for consumption, in case there is the physical deficiency. So now it's clearly stated in the law, and the criteria condition must be met by warehouse keeper, such as in the document to prove the non-physical loss and further documentation. So mainly that was today about the most important developments introduced in the executive regulation cabinet decision 108 on the federal decree law number 7 on excise tax. And now we should move to the last part, which is Q&A. So please, if you have any questions, you can start with it. Okay, this is fine. This is fine. So in case anyone having questions when it comes to the excise tax or VAT, you can reach out. We have our contact details here and our office hours. You can reach us by email or on phone as well. We'll be happy to answer your queries. And also, if you want to have a meeting to discuss further specific queries, we are happy to attend the meeting. Okay. Thank you so much all for attending today's webinar, and inshallah, we see you soon in further webinars. Thank you.
Thank you, Mr. Huzaifa, for making this session so insightful and engaging. Thank you, everyone, for joining us and sharing in this enriching experience. Your presence and active participation have truly made this session valuable and impactful. We look forward to connecting with you again in our future webinars. Until then, for any further queries regarding excise, VAT, or corporation tax, kindly drop us an email or give us a call. The details are mentioned on the screen. Thank you once again.